All right, Counter Range Theory Trader back with you with a weekend review for April 7th to 11th. Great day, and going to go very in depth this week. This was a great trading week, so let's just get straight into it. So, been experimenting with a 5 minute chart. So, all of these charts until we get to near the end of this presentation are going to be 5 minute. You can also trade on the 15 minute as well. There's nothing wrong with that as well, though. You're free to experiment as well. The only caveat I'll say to that is this: whatever you use as your money candle, be sure that the break of the money candle is on the same time frame. What I mean by that is this: if you spot a 5 minute money candle that creates the lower the high of the day, then the break of that money candle should also be on the 5 minute, not the 15 minute, and vice versa. In other words, don't switch time frames. Just stick with the one for your entries and stop losses and take profits. So here we go. So this was Monday. Monday we had a good trade on Euro Swiss, whereby price was below the prior day low. Price came down during Monday between the Star London session. We consider that between 2 a.m. and 5 a.m. Eastern Standard Time. So the entry was anywhere between 3:35 and 4 o'clock a.m. This would have been good for 1 to 2. Sometimes you can target the Asian session high if you'd like, but obviously it did go for much more than that. But I don't really need that to make enough money to be okay. So next one was New Zealand Swiss. Same program here. It's priced below the prior day low. It is. We'd like to see a large part of Asia below the low of the day as well. So price did drop back down. Pardon me. Got to yawn a little bit. I'm sorry about that. It did drop back down in London right here. Good entry would have been between 2:50 and 3:45 a.m. So again, your highest probability will be in the London session. That was good for 25 to stop loss, 50 pip take profit. Next one was another long. This was the pound Swiss. So price below the prior day low. London straight tanked. Gave us a money candle at 345. We love to see price break the money candle at 345. That's a good setup there. A lot of consolidating here, but eventually price did go back up to the daily open. So that would have been a good take profit level as well. Didn't get all the way up to the Asian high, but again, that's where just knowing your take profit and stop loss would help with that. So I would not try for a 30 pips take profit and a 90 pip, 30 pip stop loss, like a 90 pip take profit, trying to get all the way back up here to Asia. I like to be in and out. So daily open would have been a fine take profit level. So the next one was Canadian dollar. Monday had just had some great trades. So this was a short. So we had a prior day high right here. So we need to see price being above this line. It did eventually get above it right here at about 8:30. So that would have been good for 25 to 50, a 1 to 2 risk to reward. Did go for more, but then you see this sharp retrace here near the end of the USA session. So that's why we like to be in and out, because we don't want to sit through all of this. Okay, keep your profits. Okay, so that was Monday. Okay, Tuesday, I think it only gave one setup, whereby we had the euro pound price going above the prior day high. Money candle break below there, a little bit of a retrace. So between 255 and 320 was our ideal entry time frame before price just straight tanked. That was good for 50 pips. That was the only trade that was good for Tuesday that I wanted to go over. Wednesday gave us a few, whereby we had prior day low here. And then this was a USA session trade, a rare one, where between 1010 and 1045, price did go ahead and skyrocket up. I'm not sure if this was news driven or not. I think this was something where the president said something and the market went haywire, but I could be wrong on that. But this would have been good for 50 pips. So, at the low of the day here between 1010 and 1045. So that was pound Swiss. Thursday, we had the prior day high right here, price above it during London, again at 315. We wait for our money candle right there. Strong close below it, and then we just ride it on down. We love to see straight drops. We don't like to see a whole bunch of consolidating and all that type of stuff. No, we like to see straight drops, straight to take profit. That's what we love to see. That's enough for me. All right, and then also we had New Zealand Swiss here. Price didn't get above the prior day high till about during the London session. About 10 after 3 Eastern Standard Time in the morning would have been where our money candle was shown. There's a basic M pattern, leg 1, leg 2, and then a close below it. Pardon, excuse me again. Then it went down, and this one did take out the Asian low and kept right on going. But again, all I need is 50 or 1 to 2. So this one here was New Zealand yen. And then we had our, price above the prior day low. Just tapped it a little bit before it went straight down. This one would have been good for 50 pips right here. Again, but around the London session. Let's see, we had Australian dollar, Canadian dollar here on Thursday, where price did go above the prior day high during London. M session or M pattern, leg one, leg two. Money candle right here, then close below it, slight retrace. We're in between 205 and 235, and that would have been good for a 1 to 2 risk to reward. And then last but not least, Friday. This one was a very wide range, but it did give us some entry here. This was the money candle right here, big old long spike up to the top during Asia. And then from here to here really could be our trading range, where if you're above, where you're in the range of the money candle, as long as the high of day holds, then you're fine to enter. The best entry would have been between 440 and 445. But this was a big one. It was a 60 pip stop loss and a 180 pip take profit. Because the range was so big, it did work out. Is this my ideal trade though? No, not really. And then also we had Australian Canadian. This was during London as well, about 440, where it just barely kissed the prior day low, and then just went straight up, back up to the prior day high just about. So entry would have been a 440. This one would have been good for a 1 to 2. Obviously, it did go for more than 30 pips, but again, I don't really need that. And then also we had Australia, New Zealand, where we had a pretty much majority of the day straight drop below the prior day low. The money candle did eventually come between 515 and 555, and then really nowhere to go but up. So that was Friday's trade there. So I wanted to go over the daily chart now to show the best trades of the week. And this ties into the prior video that I just did about the daily bias. If you're not familiar with that video, definitely go to the description of this video and I'll put a link in there for it, where these were the best trades of the week just based on the daily chart. Or also our, well, let me see if we have, so these were the JPY pairs, also based on our indicator as well about fast back testing too. So, but let's remember though, mainly I'm going to focus on the daily bias. So remember, if you see a red candle, your daily bias is long. Price went below the low here on Thursday. Boom, exploded. I love to see little short ranges like this. And then no matter the color, and then as long as price pokes below that low in a timely manner during London, ideally, and then you get a large, just straight skyrocket. Anybody who went short these 2 days got toasted. Most of the other yen pairs did the same thing with a Wednesday. So again, we have a red candle here. So our daily bias is long. Price went all the way down here, big old long wick, and then just closed all the way up here. So that would have been ideal. Another Wednesday long, again, we have the red candle that shows us our long bias. Entry could have been anywhere below the low of the red candle. Okay, remember, we're still going long on the prior day low, but I'm showing you a week at a glance. Monday, Tuesday, Wednesday, Thursday, Friday. So Wednesday was the best day for this one on Euro Yen. For Canadian yen, same thing. Red candle. Price went below the low, dipped below the weekly open price, skyrocketed. Let's see. For dollar yen, best trade would have been, I had the Wednesday short on here. This one, it could have gone either way though. But honestly, we'll just focus on this trade for now. So because, with this red candle here, really it would have been this long here. But it could, like I said, it went either way, because when price went above the prior day high here, this was late in the day, but all that would have been yours right there. So the Wednesday short was the better trade. However, there was also an opportunity to go long on Wednesday. And then, you could have really just got both sides of the range, and then you could have taken a short. So considering this range here, you could have taken the long side of this range here and then the short side of this range. But I don't trade like that. But there were two opportunities. If you miss the long, sometimes there may be a short. So that's the only point. But the better trade of the two was the short at the high of the day. Let's take it down. Okay, next, Wednesday long on Australian dollar because of this red daily candle. Okay, so going long below the low of this red candle would have given you all of that, and that was awesome. Another Wednesday long on New Zealand yen. So, again, red. So we're long for the next day. That did play out there. NZD pairs, green candle here. So we're short. Go short above the prior day high. All that would have been yours if you're a swing trader or just a day trader. you would have at least gotten just all of that. So that was cool. Let's see here. Euro New Zealand, same thing. Green candle, so we're short. And go short anywhere up here. All that would have been yours. That was the best trade that week. Australian, same thing more or less. Wednesday short, go short above there because you got a green, so we're biases to the downside. All that would have been yours. Same thing here. Tuesday was a green, so Wednesday we are short. Boom, all that would have been yours. For CAD, same thing. Wednesday short, green, so we're bearish, short above the high. All that up there was fine. But then, as you see, price did come roaring back. So, take what you can get, and don't let this be you. Don't let a winner, a massive winner like this, turn into a loser because you think price is going to continue down. That doesn't always happen. Okay. So let's see. Pound Canadian, same thing. We have a green, so we're bearish, and then we short above the high right here. So that day could have been yours. Let's see. For dollar Canadian, we had kind of equal highs here. Again, we like to see those small candles because small candles give big candles. So small candles can lead to big candles. So again, a little poke right there above the high and then just tanked. So, but this green led us to the red. Okay. So next Wednesday long, New Zealand CAD going long below the prior day low. Boom. Same thing here for Australian CAD. Red candle leads to a long bias. Price spikes down below the low, spikes up. Dollar pairs, there were none. Okay, don't force through trades. Okay, there were no trades. There were just none. All right, this one was a near miss. Okay, in terms of just the range, it didn't go below this low. This one here, could you have gone short here? Yeah, but then ultimately, though, price just skyrocketed again. So if there was a trade here, it would have been this one, but same thing here. Just, nothing worth shouting about. Just, it's just a trending market. Even though you had a long, you would have been long here. This Tuesday did not go below the low of this Monday. So I don't trade like that. There's no trade there. Now this one did. Okay, so notice this. Okay, no trade here because the low was not rated, but it was rated here. Okay, this was Tuesday and then Wednesday. That's what I trade right here. Okay, but it has to go below the prior day's low. Okay, that's to protect me. All right, no guesswork involved here. Okay, all that good to go. Same thing here for New Zealand. Okay, this red told me the next day was a long bias. Below the low, boom. Okay, pound, same thing. Led to Wednesday's red candle, led to Thursday's green one. But again, below the low, boom, same thing over and over. And then Swiss, Thursday short, you have a green. So obviously I'm bearish for the next day. Price went above the high. Good to short. All right, so let's see. And then New Zealand Swiss, same thing. Wednesday long. This was the best trade. Again, you probably, if you got a keen eye, you'll see here this was a trade too, but I'm only focusing on the best one. And this red candle here led to this green candle here. All right, so you just take the opposite. That's your daily bias. The opposite of whatever the prior day was. If the prior day is red, I'm green. If the prior day is green, I'm red for the next day. That's it. Same thing here. Green candle on Wednesday. So Thursday, I'm short. Poked above the high. Tanked. Australian Swiss, same thing. Poked above the high. And for whether below the low here, all that. That was the best trade. And then New Zealand, I think this is the last one. Yeah, green. So I'm red here. Poked above the high barely. Boom. Next 2 days. All that could have been yours. Okay. So in conclusion, the highest odds this week, we're doing London between 2 and 5. As far as days goes, nothing touches Wednesdays and Thursdays. Those are the best trading days using this method. It's just bar none. So focus on the green candles for shorts and red candles for longs. Okay, you want to try to see that continuation traders get trapped the wrong way. You want to be on the right side of that price action. And just for me, I'm stopping after 11 because this was a great week for me. But at the same time, Thursday and Friday had me over trading a little bit. Want to be sure I do better in the future. But for now, I appreciate your time and attention. Thank you for watching. That is the weekend in review, and have a great rest of your day.